Okay, you're good.
Well, we're going to get going here today. Thanks for tuning in this week. We're going to get back to the markets, and we had a USDA report out today, and basically to sum it up, it was just a dud. I mean, you can search and search through the numbers. There just wasn't a lot there. About the only thing that really stuck out to us, okay, was the Brazil crop got 1 million metric tons bigger, while the Argentina crop got 500,000 metric tons smaller. My thinking is what's going on here is a USDA kind of tipped their hand in here and what they're going to do with the South American bean production. Okay, is that as we move ahead, even if the Argentina crop does get smaller, I would expect, Brazil's would maybe even inch up a little bit more. So the overall South American production is probably going to hold about unchanged. World carryout levels, not much unchanged there either. When you get the market's reaction today with corn a little bit weaker, I mean, it just kind of reminds us, that bull markets need to be fed. And the other thing is this March report historically is kind of a dud. And the big focus is the end of March where we got a stocks report and the acreage report out at that time. So, the markets this last week, I mean, the big news has been, or the big move has been the bean market, as we saw new highs made. And what we need to remember on the bean side of it, it's really the world markets that have led us higher. I mean, the top chart is May Canadian canola futures, as you can see, early or late last week, that made new contract highs. As you look at the bottom chart, that's palm oil futures. Okay, here again last week, that made new highs and new highs again in here this week. As we look over here at Chinese bean futures on the top chart, it's similar. I mean, last week, okay, we made new contract highs late in the week, okay, and then again had them here yesterday before falling back today. What is important to recognize, though, on the bean complex as a whole is it is world vegetable oil prices that is leading us higher. It's not the meal market. And on this bottom chart shows us Chinese bean meal futures, okay, as that have traded to the lowest level in 2.5 months, okay, and it's been more than 2 months since contract highs have been made in meal. Historically, the meal market needs to lead us, okay. That's where I'm just a bit cautious in here right now. But again, this is where we're seeing this bullishness in here is coming from the bean side of it. Okay, I'm going to jump over here to a weekly chart, okay, on soybeans, and you can see we ran up to the 450 level. You got to call that some major resistance. Now, if we get above that point, the question is how much more can we really run? I guess to me, there's a couple ways to measure it out. Is when we went from $10.50 to $12, that was $1.50 run. So if we go another $1.50, about $14.50. We're looking at $16 beans, which was a spike high back in 2013. Okay, if we have the jump like what we saw from $12 to $14.50, a $2.50 run takes us to $17. And I'm sure then if we get to that point, all-time highs would be targeted at that point. I got a question in here on should I be buying soybean meal for livestock needs this summer? And what about my buying some corn needs for ethanol? My bias right now on old crop, both meal and even corn, is that the trend has turned down. So if I'm buying for livestock needs right now, I probably would be a little bit patient in here, especially with nothing in this report. And I think it's getting a little late in the year for South American weather. Now, as I go to a corn chart, again, with this one, we haven't made highs in here for about 5 weeks. And that blue line is a 40-day moving average, and the purple line is a 50-day. And as you can see, we've been able to hold that as support. But this corn market, even with the bean market jumping up, is showing us that it is running out a little bit of gas in here right now. We just need to be really cautious if the corn market gets some consecutive closes below the 40 and 50-day moving average, as that would turn the trend lower. As you can see here, we haven't been below the 40 or 50-day since last August. This has been a pretty solid uptrend in this market. The chart that really has our attention on corn and kind of screams to us that a high's in place is when you look at the May-December corn spread. Back in early February, that spread peaked out at $1 a bushel. And here that spread has weakened up about 40 cents, okay, in the last 5 or 6 weeks. Typically, bear spreading in markets is more indicative of some highs being in place. But do admit that we have seen some bear spreading on the bean side of it, and yet it went up and jumped and it made some new highs. But I got to tell you, I think this corn market in here right now, that the spread needs to really narrow up. There is no risk of running out of old crop corn, and this focus will soon be put on new crop. And so when you look at May being 60 to 70 cents over December, my argument is either old crop is too high or new crop is too cheap. I think that's something that we can really debate in here on that. I'm going to switch over to a wheat chart here, and I know I'm kind of jumping around a little bit this week, but it's kind of like my daily random thoughts, except for this on a weekly side of it, on a few different markets. And on the corn chart where he showed you the 40 and 50-day moving average holding, we're on wheat right now. I mean, we're getting signs that this is willing to break lower. And so far on the major ag markets, as we are seeing, the meal market is below the 40 and 50-day moving average and is starting to trend lower. And even when beans rallied this last week, the meal market struggled. KC wheat has already broke below the 40 and 50-day moving average. Now Chicago wheat could be the next one. We're just seeing some of these ag markets starting to look a little bit tired in here. And that is a little bit of a concern as a whole. And I think what people have got to be ready to do is at some point, we may have to sell on the way down, okay? Not yet, and we got a lot of weather in front of us this summer, but that's something we're going to have to maybe look at doing. We always talk about the world cash markets in here, and I just think this is a good point to take a snapshot in here, and these are the prices as of this morning of where the U.S. is compared to our competitors. And as you can see here on corn, at the port, U.S. corn is this morning at 6.59, and Argentina corn is down at 5.90. Okay, that was for spot. When you get out to April, I mean, that spread right now is at 60, almost 70 cents. You get out to April, that narrows up to 30 to 40. So that spot spread to me is a little bit wide, but it really shows though that U.S. corn is not competitive on the world market, and I think that's why we're getting that slowdown in demand. As you get over on the bean side of it, U.S. beans are at 15.38, and you've got Brazilian beans around 14.54. That spread has widened. I mean, it was at 70 cents. Now, all of a sudden, South American beans or Brazil beans are 80 to 85 cents cheaper than U.S. offers. Again, that tells us harvest is progressing along, and they don't have some crop issues that way. On the meal side of it, Argentina is offering bean meal substantially lower than U.S. And when you get over on the winter wheat side of it, the U.S. market is fairly competitive, but the problem is we're at such a shipping disadvantage when you look at wheat heading into like the North African nations where you have that demand. So, this is something we just have to keep in mind where when we first started this, okay, we had corn that was so cheap compared to the rest of the world. That has changed. As I'm going to sum some things up, and if you have some questions, feel free to start typing them in there. I know last week I got to get a little long with my presentation, but a lot to go through. I'm trying to stick these things down to 10, 15 minutes at most. So as I wrap up here this week, I think we need to acknowledge that the market has changed. Okay, from last fall, we were really on a demand-led rally. We had strong weekly export sales. U.S. corn and beans were cheap on the world market, and as the U.S. prices kept on going higher, the world market was increasing at a faster rate, and we stayed competitive throughout. Okay, now that's not the case. Okay, when our bean prices jump 40 cents, you're seeing Brazilian price jump 30 to 35. In our corn market flat, you're seeing the Argentina corn market weaken a little bit. Okay, so we have to admit, we are not competitive. If we're going to rally from here, okay, this is going to have to come from supply losses. Whether if you're looking at the Argentina bean crop getting a lot smaller, the second corn crop in Brazil having crop issues there, or when you get towards the U.S., do we have crop problems here? Okay, my thinking right now is this market's going to be more choppy to lower in here during the month of March. I think that's probably going to be the accurate. I mean, so that's what I'm thinking is going to go on. And then it comes down to spring planting. I'd have to say the number one question I get all the time is how high will we go with crop problems? Okay. You know, I mean, I just showed on the bean chart, you know, where you can talk $16, $17 beans, you know, on corn, new crop corn. I mean, it's going to be $5.50 to $6. And if you get above there, you know, you're going to have $7 talk, you know, and on wheat, you know, I think the wheat market is the one that's going to be toughest to rally on crop issues because wheat is grown in so many places of the world. Okay. And so I think the last one to rally, okay, on weather is going to be wheat. If I was going to take just a flyer on a market to buy, if we've got some weather issues out there, you know, I think one maybe to take a flyer on would be oats. Okay, I mean it's dry in the Western Canadian prairies, and you know they raise a fair amount of oats up there, and oats compared to I think oats compared to corn looks relatively cheap. Now the problem is there's no volume on September oats futures, so you know you got to be a little bit cautious. But that's one you'd maybe want to take a look at. The other thing I like always throwing back was how high will we go with crop problems is what about if we get the crop planted? Okay, I mean, you know, if we get the crop planted, we're going to take premium away in a hurry. The other thing when we look at acres into the end of the March, we need to remember that all crops are profitable here in the U.S., or I guess I probably shouldn't say all. I'm going to get an email or two saying, well, this crop you can't make any money raising. But overall, these crops are profitable. And so we're going to get acres increasing here, in not only in the U.S., but the rest of the world as well. Okay, acres are going to jump. When I get back to last summer and I just look ahead in here right now, or I look back and then I look ahead, is the thing we heard last year was this market will never rally. This market will never rally. Okay, and I remember having some conversations with producers on, you know, man, if beans get above 980, you know, we can run to, you know, 10, even outside chance to run to 1050, and it's like, man, they're never going to go to 980. Well, I mean, look at how wrong we were with thinking they only go to 1050. Okay, this market really went up, and so you know, it just seems like the attitude, you know, 6 months ago was, man, prices will never rally. Now, as we go through the winter months, what we often hear is, man, prices won't ever go lower. Okay, you know, it's just the opposite occurring, and you know, and what I remind everyone of and I'm going to use beans as an example, is okay, we sold beans at $9 and they went to 14, and that's disappointing. But it'd even be more disappointing if you didn't sell any beans at $12 now, and they do go down to 9 here this fall. Okay, there's just a real balancing act we've got to put in place, okay, on how much grain you want a forward contract or price out. I mean, you need to have enough done with if beans go down to $9, but yet you still want to have beans to sell in case we go to 15. Another question: do you see the dollar as being overbought? You know, I guess I probably don't in here right now. I mean, our interest rates are gradually creeping higher, and higher interest rates are going to support more of a firming dollar. So, you know, I don't. I think the weather is going to move the market and our supply and where we're priced out on the world market more than where the U.S. dollar is. Back to an insurance question: do you recommend PLC or ARC for farm programs? You know, I mean, a lot of it comes down to areas of the country. I know in our area, PLC, you know, looks really attractive. I know I got insurance questions last week, and I had to avoid a little bit. You know, again, it's tougher one, but I see a lot of situations where PLC is the preferred choice. So, you know, this is about it, you know, wrapping things up in here this week. Again, you know, you have questions or so, feel free to drop us an email or any suggestions for the next week. That'd be great. Thanks for tuning in.